Holy crap, you guys. Out of control. Good morning. Good morning. I legitimately actually a couple minutes late today. But it's because I was trying to get all of the news flow together so I could put this plan in place. And I'm like, oh my God, it just kept coming. It just kept coming. And I mean, my goodness. I don't know. How you guys feeling this morning? Midwest in the house. Look at you guys. I love it. They love the jams, GM. Hey, June. I like the song. It's a very good song. Bro is here. Bro is here. We have made it. By the way, if you're not subscribed to the channel, please go ahead and subscribe. Definitely give the video a like. But we do this stuff every Monday when the market is open. What we're going to do today, if you're new, is basically, let me take this comment down. What we're going to do today, if you're new, is kind of go over what happened very briefly, because I think a lot of people, most people, I think, have an idea of what's going on right now. What to expect, what do we have on deck, and any potential money that we can make off of the situation. Because, I'm a trader. Most of us are traders, and that's kind of our job, regardless of what's going on. The good news is that all of my downside targets hit last week, actually a little bit further. But man, it's a hard pill to swallow after reading this news flow this morning. It was just, it's absolutely insane. So without further ado, let's go ahead and get on with the show. I'm going to go ahead and share my screen. This is where we are. And I think this is the question, right? So the question is, is it what I said bear bounce here? I guess you could call that a counter trend bounce, or is it a legitimate pivot? Meaning all right, well, we're done and now we can pivot back to the upside. Can we look at VG? Yeah, we can look at all this kind of stuff. But I would be very cautious in general. Bears still control this market. From a technical perspective, number one, all the downside targets hit. Number two, if you are into charting or anything like that, you have to be very cautious of a lower high showing up in the charts, because we definitely made new lows. We're going to go through a couple other things, but look, check this out. So I'm just going to go through the news flow today. This is I tried to put it together in chronological order. Before the market opened, we were probably, I don't even know what the lows was, 640s, way below 650, something like that. And and the headline was, at the moment, Trump is saying to Iran that they have to open the Strait of Hormuz in 48 hours or U.S. bombs their power plants. I'm like, really? That was the headline. 4 a.m. my time. I guess that's 7 a.m. Eastern. And then instant escalation. Iran threatening to put mines in the Gulf as Israel hits Tehran. This is early morning. And then, seemingly is this out of nowhere? Trump posts on Truth Social. Boom. Productive conversations regarding a complete and total resolution. Complete and total resolution. I grabbed our, I guess he's talking now, but from our boy. This is it. I am pleased to report that the United States of America and the country of Iran over the last 2 days, mind you just saw the news flow. That was the news flow. Have had very good and productive conversations regarding complete and total resolution of our hostiles in the Middle East, based on the tenor and tone of these in-depth, detailed, and constructive conversations, which will continue throughout the week. So we're not done. Which will continue throughout the week. I have instructed the Department of War to postpone any and all plans and energy where was I? Postpone any and all military strikes against Iranian power plants and energy infrastructure for a 5-day period. So we have a 5-day ceasefire. That's what we have. Oh, sorry, my cursor was on there. So we have a 5-day ceasefire, subject to the success of ongoing meetings and discussions. Thank you for your attention to this matter, President Donald J. Trump. I mean, are you buying it? This is like, okay, we're going to pause for 5 days. As long as everything's still going good. So I put out a post last on Friday, and I guess here he is. This is our boy Amit. So if you're not following him, definitely how do you do? Definitely give him a follow. I mean, everybody's following Amit. Not everybody, but that's from Amit. Pretty solid. And let me go back to this. So this is what we get. And then in the meantime, while all of that's still going, and this is where it's getting weird. Cuba's deputy foreign minister says its military is preparing for possible aggression from the U.S. I mean, this is back to back to back. And I think this was kind of on deck, like the U.S. wants to take over Cuba or something like that. I'm like, oh my God. And then next headline, Russia's Baltic ports halt oil and fuel exports after drone attacks. Like, what's happening right now? This is like, it's expanding. And then, and we have other things going on globally, right? So ECB talking about, we go back to inflation, which has been the kind of the crux of the issue. I think, regardless of the geopolitical climate, we know that inflation is hot. And I think that's really the issue here, because it's about oil. And if oil stays elevated for a while, which it kind of has to stay elevated, like I don't think anybody expects to see sub $70 oil anytime soon. And if they do, it's probably temporary, just because us, Japan, other places are depleting their reserves. And we're going to have to refill those eventually. And maybe it has a slightly higher low, but it's going to be somewhat elevated, at least for a while. It might come down significantly amidst headlines, but yeah, it's probably not coming all the way back anytime soon. So I think the market economically is kind of bracing for that as well. China headlines, right? Pledging more balanced trade and further opening of the economy after record surplus. Japan considers cutting inflation-linked bond buybacks. I mean, this is just getting wild. And then we have underneath all of that, we still have this potential transition at the Fed. Like, is Powell leaving in May? At this point, we don't actually know. He's supposed to be gone, but now that Trump has opened up the probe, well, maybe he sticks around for a while. And within the presidents of the Fed, within the Fed governors, we have some saying there's circumstances to hike, per Goolsby here, and then Moran saying it's way too early to alter the outlook for 2026 cuts. So all that said, it's a wild, wild market out there. And it's, also, the war ending isn't going to stop. Yeah. So I think there's this. I saw a post, I think it was Polymarket. I don't know who has the contracts out there for like when the war is going to end, or like if we're going to have a ceasefire. I saw a post from Polymarket. I think it was, I'd have to look it up, but there's like 10 random accounts, brand new, all opening that we're going to have a ceasefire. I think by the end of this month, with a couple $100,000 bets across all of them. So this is look at our boy. What's up, bud? So that's possibly a real situation. Also, why it's kind of hard to really short the market, and why, truth be told, just technically speaking, we probably should have been a lot deeper, a lot longer before, a lot longer, like in the past, a lot earlier. Sorry. And the fact that we haven't is hard because, also underneath the market is this war headline can go either way, and people don't want to miss the bounce, right? the market's not nearly as bad as it could be, or maybe would have been in the past. And I think we see that because Trump is he flip-flops so fast. It's like you don't want to miss the rally off of one tweet. We'd have no idea if we're going to all-time highs or not. But the weird thing is too, and I'll just kind of put this, there's a couple other data points I have. One thing is that underneath the hood, there's a lot of funkiness going on, right? So underneath the hood, these are the sectors, right? Technology, discretionary, healthcare, staples, communication service, all this kind of stuff. From the amount of sectors in a quote unquote bear market already, which is 20% below the highs, 20% off the highs, it's almost like 40% or more, right? Very nearly. So as of last data check, it was like 203 companies in the S&P 500 that are below 20% from their 52-week highs, which is the technical definition of a bear market. So a lot of the sectors are already there. We've been talking about IGV for quite a while. And normally I would say, hey, look, when we have these flash crashes or broad sell-offs that are very quick and violent, pretty much everything bottoms at the same time. I don't know that we're setting up for that situation in this event. So what I'll say is there's a lot of sectors that are very, very low. And in the meantime, while this is a geopolitical situation, it's like, Trump can tweet, the shenanigans can end in a split second, and you're going to get, what do we have today? 2+%, 2.5% to the upside out of the gate. I'll go over the technical levels today. I made a little post on like what I could expect. I want to walk you guys through that if it's just so it's not confusing for anyone. But remember, technicals are very much if this, then that. And so for right now, we are absolutely in a bounce mode. We were very much what we would call in the hole on Friday. Friday's price action had a lot to do with like this record, what we call OPEX or options expiration. One other thing to keep in mind that this is the last week of the quarter, and usually we don't end on the absolute lows. So, you might have thought I was going to come in super bearish today. I'm not. I actually think that we can bounce, but you have to be super cautious. And we're going to measure kind of right now, like what does that bounce need to look like for us to be in the clear, more or less? What do you want to listen for? And even if we don't hear what we want to hear, is there a technical level that says doesn't matter what he says anymore? And I think the answer to that is yes. So we'll be able to kind of put all that together this week. If there was a catalyst out there besides the war ending, I'm just going to put this out there also. What some people don't necessarily know is that we've been in a blackout period for corporate buybacks. And so right now, this is where we are today. Right? Actually, we're March 20 something. This is a funky situation where if we're in a blackout for corporate buybacks, and by the way, we've had a lot of announcements that buybacks are coming back, and at these lows, I would assume a lot of these companies will be buying back their stock. We're coming in to the next quarter of earnings. As we go out of this next earnings season, that window is going to reopen for the buybacks, and that might be mid to late April, which aligns with a bit of a seasonal bounce. Now, this year, whether or not we have a full-blown midterm election year, I'll just tell you guys right now, when we get this counter trend bounce, which we should get, does it? How long is it? And how sustained? Like, how high does it go if it goes? And how long do we hold? That's actually going to be the biggest tell. And whether or not I'm going to get a bigger dip for my eating season one that I'm looking at. So that's where we are. This is a small catalyst that could be coming. Earnings, by the way, have been absolutely killer. So good earnings across the board. Remember, last quarter was one of the best earnings I had on record. And so companies are still doing good, right? And so between that, buybacks reopening coming when there's a blackout on the buyback period. It's basically like plus we had the record OPEX or options expiration with no floor, nobody there to be able to hold it up and buy back in, and massive expiration. We get that kind of overdone move. And very near term, it's what we would call oversold. But get this, by the time we opened the stock market this morning, we were overbought. So it's like boom, boom. How does that work? Insane, right? This is a screenshot of the CME FedWatch tool, and I'm just putting this out there because it's wild to me. I don't have dates on here. What I'll tell you this is about a month ago now, where the stock market was still pricing in 1-2 rate cuts for this year. And then about 3 weeks after that, or 3 weeks ago, we went from pricing in 2. So this would be 1-2 rate cuts here. We go to pricing in 1 for this year, which is September. And the second one gets pushed out to next year, which is 2027. I mean, that was in 1 week's time after we got CPI. So after we got CPI, that's what happened. And then we get even more stuff coming on. And we push it even further. So then we pushed out 1 rate cut, maybe at a 40% probability for December. Okay, for December, after being we had rate cuts priced in as early as June. And then we go 40% as a maybe for December, and then a big cut December of the following year. Now, get this. So as the data comes through, you guys are going to laugh at this. Last week, this is how fast things are changing. So this is last week. Midweek, and I think this was PPI, amidst all the oil stuff. The market legitimately priced in a rate hike in September of 2027. Like, what? Like, for a very short period of time. And this is right before we had that kind of sell-off. So remember, the market's very much about, if you didn't know also, very much about this rate cut situation, in addition to all the geopolitical stuff. It's not just the geopolitical stuff. In this instance, what's happening overseas is affecting oil, which is going to affect the inflation rate, which is why the interest rate thing is moving quite a bit, like the way that it is. But this FedWatch tool is super important because it's kind of like it's live, right? You can go to the website, you can see it live as it's happening. To me, when the bond, and the people that do this is the bond traders. So when the bond market prices in a potential rate hike, I'm like, all right, this might be live data, but that's a little wild. I think moving forward, you can still look at this, right? And if these, can this get worse, I guess is the question. It can. And how this gets worse is that this rate cut shows up again, or rate hike, and maybe they put it for December. Just saying, will I believe that? No, I won't believe that. That will probably be a local bottom. So if we're going to have another flush, it's going to come from this number right here, and that thing showing back up again. You'll be able to see that live. Just that was for a very short period of time last week. And then we had only 1 rate cut, not till like October 2027. And then we had another one in December priced in. So why they would do that, I don't know. But here's where we are today. So this is right now. This is live. And again, it's just Google CBOE FedWatch tool, and you'll get to this website. And this is where we are live. Actually, I think I can pop this up. Oops. And as more data comes, I mean, we could see more. But this is just, I go to the probabilities tab and it'll show you what it is in that moment, right? You can have a comparison view and you could swap that between different, here's December 2027, what that looks like before. This is not giving me the comparison. I guess it's only giving me the comparison for like 1 or 2 weeks. Yeah, the rest isn't really that big of a deal. But this is where we are. No cuts, 350. Basically, October. Not till December. Even December, 66. So basically, we've nearly priced out. You'd want to go to January to actually see what we're pricing for this year. Yeah. So 65% probability that we're going to have no cuts. The fact that there's still a 21% probability of a rate hike this year, and that's higher. So the probability to get a rate hike this year is still higher than the probability of getting another cut. Like, to me, that's still kind of wild. Does that happen? We'll have to see. What we know is true is that the Fed is absolutely in a rock and a hard place. Like, they're in a very tough spot. And this is where we are. So this is the exposure index, not a survey, for NAAIM. And we've been talking about this for the last few weeks. We started around 80 right here. So early March, we were at just about 80% exposure. Right now we're at 60. And that was, you can go to this. So I just searched NAAIM. And this is what it looks like. 60 spot 24. And that came out on March 19th. So these are posted every Thursday. You can revisit again this coming Thursday. What I'll say is that we will not bottom if we're over 60 typically. And this is very close to. If I were to, you can click this file right here and it's a download. But this index, just for reference, does go pretty low. And we're reading the mean, right? So it's this column right over here. And this is where we are. I think what you can see is like, okay, 100, over 100. This goes over 100. But 64 January ends up being the low right over here. January 2025, 64. And I'm looking for what year, what was the, when did we have Liberation Day? 59. So April here, this is Liberation Day. Liberation Day lows, it goes to 35. So if you're monitoring this, it's below 60, typically, where we're going to end up having a bottoming situation. Can it go below 60? Yes, it can. And this is what that looked like pre-Liberation Day, or at the bottom of Liberation Day before. This is March of 2025, last year. Interestingly, it does nearly the same thing, 68, 64. By this time last year, we were actually at 60 also, about 57. And then for 1, 2, 3 weeks after that was the bottoming process. Does that happen again? I don't know. But it's weird how the timing is aligning like nearly exact. But this is just a scroll for you guys so you see it. It's usually around 60, definitely below 60, 45. So 2023 lows. October 2023 is the bottom, 45 and 36. So 40 to 30 is definite lows in here. When we get closer to this, I will end up pulling a data point from something called the COT survey, which is a commitment of traders. That's a whole different thing. And we'll start looking at trending data from there. Because I think that is actually another tell that will give us one more data point. But just so you guys know, this is a single data point, and I'm just scrolling through this to show you guys, if you're not familiar with how this index works, where the typical ranges are and where we end up landing at the lows. So at the lows, it can be sub 40. But that's, I mean, you see that, honestly, we're probably going to get a hefty bounce. We're close. We're not there yet. So that's where we are at the moment. Not quite there, but very interesting for sure. So what do we have to look forward to? And that's what we need to kind of like really look at, right? So right now, this week, do we have any data on deck? So I didn't have a chance to look at this yet, so I haven't really even taken any trades either because of that. What do you have? Nothing really. Tuesday, 2-year note auction. That's sometimes important. So the 2-year note auction could be a thing this week. Some speeches. Nothing really Wednesday. Gas setup. We'll have rig counts. Rig counts are pretty low. Those might actually go higher. Weekly jobless claims. Here's what I'll say. Weekly jobless claims at 205, coming in this week with a consensus at 210. This may start to play may start to come into play a little bit. At 200,000, like that's not a horrible job market. This is, here, I'll just go. This is like your 5-year kind of max. Oops. I don't know why that's doing that. So this is 230 here, and we'll just kind of like put a straight line across. At 230, if this is really over 250, that's where things start to get concerning. We're not here yet. And so this is the other storyline that's in the market right now, is that if what's the word? If we have like AI taking over jobs, and I think that's the question, right? Like from a super high level perspective, I think we can see that, yeah, we're going to have some jobs go away very near term. Some software companies are probably going to be in trouble, but long term, there's going to be new companies show up, and in the near term, does the job market hit a low, and that's going to show up before we can create new jobs? Like, is there this transition period? And that'll probably show up here on Thursday. If, this is a number that could actually have an issue. 7-year note auction, bunch of Fed speeches. So we just had the FOMC. That's it. So nothing major on the catalyst front, at least from the typical catalyst front. Let me go ahead and pull up Evan's, our buddy Evan's timeline, because he does a good job too. And Evan will do kind of like a catalyst watch every day. He loves his Bitcoin. Did he not post it? He usually pins it. He must be traveling. I don't see it. So if we don't have Evan, it'll be Lux Algo that does a. Do we not have a catalyst watch for this week? Jesus. Everybody's basically said, we're not doing a catalyst watch because nobody knows what's happening. That's hilarious. All right, so let's go over to earnings, check earnings for the week, see if there's anything going on. Probably not right now. We're going to have, this is this week. Nothing burger for earnings. Good God. Carnival, PDD. The Trump market is like, that's hilarious to me. The Trump market situation. I'm not even looking at the charts yet. I'll tell you that much right now. Let me just see on my deck. What do we have, right? Yeah, so let's just go ahead and take a look at earnings. Next week, I think, is more important. Okay, so we're super low. You got Cinex and Nike next week, and then another break. It should be here. And then this is April 13th. So this is mid-April. Earnings season comes back. So this is where we are. We have a blackout period on buybacks. It looks like we don't have a lot of confirmation on the earnings front just yet. But after mid-April, we'll have heavy earnings on deck. I can't believe nobody did a recap or a catalyst watch this week. Dude, so funny. Yeah, this is the thing. Trump is absolutely trying to, the issue is we're heading into a midterm year. Trump cannot afford to be in this situation at all. Oh, this is all. Trump cannot afford to be in this situation coming into midterms. He does not want to do that. So, I mean, for him, he's not going to like it. Did Evan literally change his? This is the wrong. God damn it. You guys. Dude, where's Evan? He did. I'm over here on the wrong freaking profile. Okay. Thank God Evan did something. All right. So he does the catalyst watch, and this is what I wanted to see. Okay. So Seek and Alpha volatility watch. So a lot of Fed speak, Broadcom dividend, nothing really Monday. Tuesday, Braze earnings. No. Two Harbors. That's one of those dividend stocks. Oh, they're going to be acquired. Interesting. Flash PMIs. Shop Talk Conference in Vegas. Keynote from Reddit. We could probably look at Reddit. Melly at Morgan Stanley Conference. Crowd CEO. Keynote at RSA. Oh, okay. So RSA. He doesn't have this, but if you don't know, RSA should be in San Francisco. Usually San Francisco. This could be a CrowdStrike, and yeah. So this is a massive. If you guys don't know about this, so RSA is the biggest, other than Black Hat and stuff like that. It's the biggest enterprise conference. So it's if GTC is the big one for Nvidia, RSA is the big conference for the entire security industry. Here you go. So this is going to start March 23rd. So this is the one piece that could be pretty big, and we want to find out. I'll find out their keynotes. But go to this site just like this, see who's presenting, and if we have keynotes here. But usually it's like a show. You go to a Vegas show, and it's all the vendors have all their what do you call it? Their tents up, and it's like a Vegas show, but for security specifically in Silicon Valley. But it is a big token security. Thank you, Walter. So this is your Okta, CASBs, if you know what a CASB is, cloud access security, and a lot of that kind of stuff. So, I mean, actually, big deal. So Palo Alto, CrowdStrike, a lot of maybe even some smaller companies, that is actually a big catalyst on deck. So something that if you're going to hide out in a sector, if you see something cool like that, they have catalysts going on this week. That's tomorrow's Starbucks annual meeting, Varonis. This is, so Varonis is security, data security. And looks like that's it. Pretty much nothing for Friday, except for the the rig count. I don't know how important the rig count's going to be, but security sector this week for sure. Really nothing major on deck other than that, right? So Wednesday, nothing. A bunch of Fed speak Thursday. Friday, we're going to get consumer sentiment. I guess Thursday is going to be the big one. We got a two-year note and RSA kicking off next week. That's pretty much it. So before we get in the charts, I do want to look at one more thing. Rubrik. I would check the conference. So Rubrik is data protection. It's not the same kind of like. I'll just tell you this: security is so freaking nuanced. Let's see if they're in there. Cisco, Microsoft, Rubrik. Yeah, so Rubrik is here, right here. So they'll be there definitively. Ubiquity, Microsoft. Yeah. I used to go to this conference like back in the day. Wednesday. Innovation Sandbox winner. But anyways, you can check out the site. Before we get into the actual charts, though, I made another post. So I was like, this Miss Cleo person, she sent me, I don't even know what to say. She sent me her forecast this week. I'm just like, I took one glance and I just kind of like turned it off. I feel like we have to read it together. I did not want to read it by myself. So let's go ahead and check out what Miss Cleo sent, because it was a little weird. But we'll read that. We'll read her reading, which is the legit astrology for the stock market, and then we'll jump into some charts. So after the astrology, send some requests if you want to drop some tickers. I'll try and do a little bit longer today so we can get through them. If you don't like this part, it's all kind of, it's all for laughs, but sometimes she's wildly accurate. And yeah, I'm curious as to what she has to say this week. So let's take a look. All right. So, I mean, is it that bad? I mean, my thing right now, my hair, this is the wrong comment. Was it that bad? The issue is like, dude, this top card. So the way this works is that we get a theme card for the week. Like all I saw was that. That's our theme card for the week. Like, I don't think it even gets worse than that. Like, I mean, I don't know because I don't do this stuff like that. But like, I mean, it's a 10 of swords. Is the 10 of swords for sure. So it's like the highest number. And this guy is literally laying. I mean, at least it's a cape, but I don't even know if that's like a pool of blood. Somebody dies this week. That's all I think she's going to say. I have no idea what she's actually going to say, but we'll see. So that's the theme card for the week. Maybe it's the Bulls. Maybe it's the Bears. It could be the Bears. I don't know. And then every card gets every day gets a card throughout the week. So what happens on Wednesday? All I know is this Wheel of Fortune is a wild card. And I'm looking at some cups over here. So 7 of cups. This looks like watch out for Wednesday. I don't know. So this is what she's saying. So The theme card is the 10 of Swords, and last week's 4 of Swords gives way to the 10 of Swords, which highly suggests a series and a final climax of selling pressure. I mean, that's what I thought she was going to, something like that. We'll see. Will it break down and end the bull run, or will we bottom out and prep for another climb? That's the question. So she's saying, will we bottom this week and the bears die? Or will we end the bull run? I mean, I don't know if that's an airstrike. She can't call that. She can't call that. The 10s is final and complete. So that's the good news. 10 is final and complete. It comes without warning from a place you least expect. Of course, she's going to write something like that this week. I don't expect a lot of big trend, but small to medium is likely. How do you do that? How do you do a 10 with all the swords and then in the same breath say, I don't expect a lot of big trend? Like, this is why this stuff kills me. So anyways, let's see how she did today. We'll grade her on today. How's that? So Monday is the 6 of Wands, Lovers to 6. Doesn't give us much, so we'll evaluate the card on its merits only. We expect some kind of news event or announcement overnight or early in the morning, okay, that will drive price action for most of the day. Wands are impulsive, so I would not chase a gap. Instead, wait for a good pullback. If a trend does emerge, then you can chase it. Just be careful around lunchtime. I mean, lunchtime, we usually see some reversals. So, I mean, I'm going to give her a C plus on that one. I don't know. Tuesday, 7 of Cups, 6 to 7 gives us something to work with. This card brings, guys, this is straight up. Like, Tuesday, is she calling the top? Illusory. How do you pronounce this? Illusory gains. So we would expect an attempt to rally that gets faded by the end of the day. I have this in the cards. Maybe not for Tuesday. Actually, maybe Tuesday. But we'll see. I'll chart it out for you. There are times when this waits until the next overnight session. So don't go all in on puts. Oh, she's just assuming that you're buying puts. You can chase green early, but not late. All right, fair. You can chase green early, but not late. And then Wednesday, I lose all my money. I mean, I would have said illusionary. Is illusionary not the right word? Because she's writing illusory. I don't know. Wheel of Fortune Wednesday, so we'll see. The arrival of Major Arcana suggests a bit of an energy change here, especially with this card, which signals a lot of back and forth turning of cycles on all time frames. General reversion. It almost always mean reverts when following Major Arcana and delivers at least a medium trend day. So be careful of whipsaws. So she's legit saying so far, if we're up today, up tomorrow, Wednesday, we mean revert, which means go back down. And then Thursday is the High Priestess. Back-to-back majors says that this week is meant to end, ouch, with a splash. I don't even know what that means. End with a splash. Like the HP, oh, that's High Priestess, says to go inward. She says to go inward and seek advice from your inner self. Ouch. Only way to play wheel would be in the center. Otherwise, you're up and down. I don't know. High Priestess says, go away, basically. Seek advice from your inner self. Trust your intuition. Wait, don't chase. Look for mean reversion with energy similar to that of Wednesday. It likely reverses again. Oh, tomorrow. Is Thursday tomorrow or is Friday tomorrow? I mean, it can't be Friday because that's the Hermit, right? Hermit's slow. Well, maybe it's not. I just think Hermit's slow. I guess it's not. Third major in a row, and it's another one that's just hanging back and waiting for a better setup. All right. So maybe just long until tomorrow afternoon. Now till tomorrow. Today's dip till tomorrow, and then call it a week. That's very possible. This guy says that a very compelling trade may appear, but we must resist the temptation to join it. Yeah, over the weekend stuff, I mean, it's just been so wild. If you, this guy, my intuition says to go long. I mean, I'm not looking at the charts. I mean, I can try to pull it up. My intuition would be that you could long it for a day or two. Not yet. I pulled to the chart. Wait, I already gave you the level, 652, just so you know. That's a big bounce intraday, though. I think I can play this market like a fiddle based on this chart, actually. Oh, yeah. Is that a saying? We'll see. I have pretty clean read. Regardless, well, so we could have tweets that go crazy though, which is the hard part. So this guy says for Friday that a very compelling trade may appear, but we must resist temptation. This means you must watch your emotions and refuse to chase panic or euphoria. Okay, a green day is highly likely on Friday, especially if Thursday is red. We've been seeing that, but not this last week, right? Like if we have a down week, usually Friday has a lot of short covering. There's no short covering this Friday. It happened all basically today. A green day is highly likely, especially if Thursday is red, but I would not chase it. A midday fade could destroy profits, if not a full-on reversion when Monday arrives. Okay. That's what she says. So the recap, bigger energy here than with, so be safe, be ready for a ride. Expect a statement week. What does that even mean, a statement week? I don't even know what that means. But here's what I'll do. We can go into the charts right now. And before I jump into the requests, what I will do is I'll just do like, this is my quick view of what I do every week. And I haven't done it yet. Oh, this is the wrong one. Index here. And I usually start on a 30-minute time frame. So I have a little bit of a different layout right now. Well, this is the same as what we've had the last few days. I got gold coming down pretty hot, but right off the 200. I'm interested in gold. We'll see how that does. It's crazy. It's not, I mean, gold has come off a very high, but normally in this situation, even with the dollar where it is, I feel like the gold and the Dixie alignment, it would be dollar up, gold down, dollar down, gold up. That kind of alignment has, it may actually come back into play. It's not been like that for the last year or so while gold's been on this face ripping rally. I'm just taking a quick look at these indexes and they did not look great, but I'll give you the 2 cents. So I don't have the VIX here. I don't really care about the VIX in general. If you don't know, the VIX only measures like a 5-day period of SPX option flow. There's a video on my channel. It's like way buried. It's called The VIX is Broken, but it tells you basically why. I would probably defer to the fear and greed index, but since the proliferation, if you will, of 0-day SPX and SPY options, I just don't think the VIX is going to give you that good of a read. Historically, though, even that 5-day window, which has been that 5-day window forever, anything over 35 is usually where we're going to see, like, that's where you'd want to buy. I think we got to about, this is intraday. This is today? No, Friday. We got to about 30. And this is March 9th here. I don't know what that is, 35. I don't know what happened March 9th. But we're not quite there. 25 is good. But from a trading perspective, if you're trying to be more like targeted, you might see a little bit more. So that said, here's where we are. I'm going to recap the last week and where we're coming in. So you guys know I use these things, these NFP levels. So March NFP is here, just under 680, 669 and change for the lows. That is our NFP range. So far, I have to assume that the highs are in and that essentially this is going to be the high for March. This is within a 1% margin of error. It's about 0.73 to the upside. So that's my stats hold true right now. I absolutely have my trigger to the downside. I'll show you how this works if this is confusing you. So if you was anybody in the webinar? You weren't in the webinar. What we're looking for is 2 to 3 days, like full open and close outside. And so the way you track it is that you look at where do we open and where do we close. Two things have to be true, right? So here, this one, I have an open below here, open below, but I have a close above. So this day, not going to count for anything. Over here, I have an open below, and then I have a close below. What we're not doing here is we're not going upside. Open below, close below. We can at least assume that we're going to trade here to this low. It's exactly within 24 to 36 hours. That's exactly what happens. I don't have a single full count yet. Even this one, even this day here, I have an open above. So even though I have a close below down here, that whole day, not going to count, right? I need the full day. Over here, I start to have a little bit of an open below. It's like an open on, close below. I guess if you call that one, we'll see. Open below, close above. So let's call this 1. Remember, we're looking for 2 to 3 days. Let's call this 2. This day, no. This day, open above, no, right? I take that back. You know why I take that back? This day is an open below. Open below here. So here we have open below. We're on 1. Call it 1, 2. This is day 3. Open below, breaking, and you're absolutely going to close below. This is the day. 2 to 3. 1, 2, day 3. We go. So that's how this works. And it always works that way. But if you have a hard time reading it, then you have a hard time reading it. Now, when you lose a level, what's cool about this system is that it actually gives you your next target as well. So if I were to go, let's just do a bunch of levels really quick. And this is, let me just move this to, I'll go 10 minutes, a 10-minute range. There's a November range that this is November here. And so this is where we are. So this November high, this is a November NFP level. So it starts at 675, which could be our high this week. And it goes down to 650, just below 652. So this orange box right now, this is actually our range. So what we'd be looking for, if we think that we're going to go further, I have to have an open below 652, which I just don't have today, right? So I don't have anything. Even if this sells off, I don't have a reason. We're not going down. Believe it or not, 652 can be, if I hold this, especially through the week, I should be able to see 670, potentially up to 675. That's what the TA is telling me. Trump tweets aside, that could accelerate it. But from a chart perspective, that's very much in the cards. And it's not unless I'm opening, again, below 652 and closing below 652 that I know that I'm going to go lower. But just so you guys know, the lower is to 640s. And then again, I have to have opens below and closes below 642 in order to think that I'm going to even continue from there. So all that said, this is going to get pretty choppy in the near term. down to potentially 620. And that's also, if I were to throw like, what's an average weekly range on the chart, you might be shocked to know that that actually is, that is actually within an average weekly range on the chart. And so I'll just measure that really quick here. So average week range to the upside from the open and from the close. Well, I just need to grab the actual open right now. I'm getting this. We can go as low as 640 this week based on where we opened, and we can go as high as 672 based on where we opened. That would be an average move, believe it or not. So it's going to be a wild one. Quite frankly, my first message to our group immediately was like, look, we are smack in the middle of this range, really this range here at this morning's open. I'm like, you know, if I like to sell premium, I'd be selling 670 puts and 650 puts at the same time, like right away. Maybe just over 670 and 650 is good. So I actually like that. What I'll say is that as a trader, yes, this red line is a 200-day simple moving average on my screen, and I'm dropping in a little bit more. But I know that we have active traders in here. So we have two points of interest. One, we have a gap down overnight. This is called a session gap, which has been filled, right? You don't want to see this go below that level. That's going to be about my 652 anyways. It's technically 653 and change. And if we do go down, the first stop is what we call like look at that. This is also pre-market ranges. So from the pre-market low to the pre-market high, this yellow line is a 50% retracement. That's a bullish-ish retracement. This can even come down a little bit lower, but if we close over 654, to me, it's actually, from a technical, the charts are literally saying that we should go up to potentially as high as like 678, and back into those SMAs. If we can get pulled in right now, 660 is your 200-day. I think a lot of people will kind of watch that level as like a price of inflection. I don't think it matters that much, but it is a magnet, absolutely. And right here, around 662, we've seen a lot of selling. So sellers here this morning, sellers here on Thursday. That's like where we tried to break down last Friday and last week lows. Also right over here, this is March 9th. All of this stuff, the 662 level becomes pretty important over here. And this is like just a general pivot. But yeah, one tweet in this range where we are can instantly send this market so quickly to 675 or even maybe a slightly higher. Does it hold there? It's not going to hold there, but that's going to be where our overhead resistance is. I can say that pretty comfortably because we're not going, unless we're opening over 675 and closing over 675. This is your heavy resistance, right? And so what we're going to have happen is that all the people that were buying dips over here, see this dip buying this whole year, this 675 area was where the dips were getting bought. We'll probably get back to that point at some time. We could, as long as we're over 650, we can. And it should be assumed that we do. But when we get there, just so you know, these buyers probably likely, I'm just assuming now, I would assume that they potentially turn into sellers. And so that's really what's going to happen here. And that's the issue of like, this is a bearish bounce. And what that would look like is about 675 becomes what we call a counter trend bounce. if I measured that explicitly, let's assume that this is the local low. Look at this. If I assume that this is the low for now, 640s, this pre-market low, without this NFP thing, just a purely technical, that's also like the heavy, that's where the bears would absolutely be waiting for you. So be very cautious into that 675 to 680 level. Just know that that's where resistance will be moving forward. And it's not going to be until we're over that point that we can say, okay, we're in the clear. And if we are in the clear, it could be a massive squeeze, but the squeeze is not going to show up until we're over that level. So I'll also show you what the squeeze will look like if we can get it, because I didn't put that in the post. But typically it's going to be like the 654 up to as high as 676. We would probably have some kind of choppiness while we deal with the sellers here and they decide what they want to do. If we can get over and hold 678, definitely over 680, then we will absolutely see just below 690. And this extension, if we actually break, a full-on squeeze will take you to 7.25, which that's where we've kind of been all year. If everything ends up going good. So that is a lot of prognostication. Right now, what we have to do is I can see this happening very, very easily. And this is definitively counter trend right now, meaning like this bounce that we're having today, this morning, is absolutely against the current short-term trend, not the super long trend, but just the current short-term trend. And you have to understand, like you have to assume that that's going to hold. So this being the trend right now, it's just clearly down. Even this just regressive trend is going to actually automate that you can get up into this area also, and that will be the same. So this bounce very much in the cards, and it's probably not over. Potentially not over. At this point, you're like a tweet away from going in either direction. So it's a very hard situation, a very hard market to trade. But just so you know, these are levels that it doesn't really matter at what point the tweets are. If we're actually holding over 680, we're going back to all-time highs. I'm not even saying 690s or anything like that. It's 678, spot 54. We're probably going back to all-time highs, and everything is kind of like a bad dream. Until then, that exact same level is going to be your overhead resistance. So be very cautious. I think you could trade to 670 safely, ish. I mean, safe is relative in this tweet environment. But if we are below 652, just know, it's more downside. The good news is that the downside isn't really, it's not like a flushy level, meaning like it's not like we're going to flush. Even if we do breach that 645 or 651, like a lot of people are talking about here, I think they're saying 645 most of the time. I don't have 645 on my charts, but yeah, 645 is September. I mean, I don't even think that's a big deal. It would say 643. Then you go 628, which is the 20s are in an average week's range. Honestly, we weren't even that far away from that this morning. So like if you're long this morning, you really don't care. Looks like we're getting a little bit of that bounce literally right here, right now. So that's what I would say is in the cards right now. And you have to assume that from a trading perspective, this is all a counter trend bounce until proven otherwise. So that means that you have to assume that 675 area is going to be your overhead resistance. We definitely don't want to assume that we're going to break out in this environment. It could be that we stick like in this range for a while before we make another direction, like before the market assumes the next direction. So good news for now. The downside targets have all hit. We can absolutely have a bit of a count. That looks like that's the biggest candle all day. I don't know what happened. That was literally the biggest candle all day as we were kind of putting that together. Do we get news? Potentially. Yeah. I mean, I'm looking at it. But look, it's relative. I zoom out. So I already gave you guys my levels. It's very seriously like 655 to 670 in this range. I think this is very tradable. It's going to be choppy, but like from a day trading perspective, intraday, I think that's doable. For micro, I'd say stay towards the edges of this box, meaning like if I'm at 670, I'd rather be short, and if I'm closer to 654, I'd rather be long. And if I'm at 660, I don't want to diddle in the middle, is what we would say. So that's a better entry point down here, and definitely if we close over 655. I think the chances of a bounce back to 670s and then some, very, very real. So kind of brings me to that, the 200-day simple that everybody's talking about. It's not that big of a deal. Usually what we're looking for is an intraday higher low, which could show up that's yesterday's low or Friday's low. Whatever today's higher low ends up being, we can get a pretty heavy push back to the upside, which, by the way, this brings me to my 20-day. It also brings me into my 50-day. Look, that's overhead resistance. And if that happens, and then you get a lower high, expect that. And this second push could be wild. And so that I think is the biggest issue. And I'll just show you this post just so we'll wrap this piece up and then we'll go into your requests. But this is essentially where it is, right? So the levels I just gave you were outlined on Friday. So 652 in change takes us to 670. This has always been on the cards. Already the game plan in place per Friday, right? Friday's close, and it does go higher. This is 678. So just know, like everything I just outlined, it's absolutely in play. This 650, no good below that, right? So we don't want to trade below that. We go into 640s. All of this that I just walked through down to 620 is in play. Also, if we can't sustain any one of these levels, let's say we stop at 670, this range between 650 and 672-ish, this is a very quick range that the market will trade through. So it's like 20 points, just under 20 points, that the way that this structure is set up right now, we would actually end up traversing this nearly 20-point range within 24 to 36 hours in both directions. So just be super cautious. I'm just letting you know that's how it is per the price structure, that we could be up 20 points today and be down 20 points tomorrow in the blink of an eye, based on how we've gotten to the point that we are right now. That said, this is the bear case. So this is worst case scenario. It's not like where I think it's going to happen. This is absolute worst case scenario. So as long as we're trending below 675, like I've said, everything is counter trend. Below 650, if we're just below 650, there is no floor. We're going to grind, but it could be slow. Fast or slow doesn't matter until we hit essentially those lower end lows. And so this is why the 650 is such a big deal. If we do, the grind can look like this. This is actually aligned to a date. This is November, like late November. If we get, I've always said this, that's the worst case scenario. This is a greedy me hoping to get buys down there. But what I didn't put in this chart that I just kind of went through today was that what's the bull case? This is not the base case, but the bull case is that we actually continue on up like this, get through just like I was telling you guys, and then we have a potential upside continuation. If that happens, we're a long ways away from that, but this current move even from Friday is kind of what I had in mind. So this current move, this first move to the upside, retesting that 675 general resistance area, overhead supply, that's the big thing to watch for. And that's going to tell us, like, if we lock a higher low here, I think that's expected. The biggest cue is still that 650. And if we lose it here on the move down, if this comes down and you lose that 650 and you can't get back over it, that's the point when you know. Between now and then, and that could take us to like June, July, August, like aligning this to the time, like June, July, August, that's sideways. So we could have a market that looks like that. And who knows what's going to happen over here. But this is what this scenario right here, boom, definitely in the cards, definitely what you can trade for, what you can bank on right now in either one of these scenarios. And it's about if we do lock a lower high, great. It's still bearish, but it's not about that. It's actually about if after having a lower high below 680, do we make new lows? And if we're not making new lows, that is actually potentially like where we would actually chop sideways in this range, which could end up setting up for that longer move to the upside. So that's where we're at. If that happens, look, nobody can say what they could have. If we do that, what this is telling you is that, look, there's a lot of ways for me to get to this low end. It's not the base case. It's not what I think is going to happen. It's just the PSA that if we do lose that 650 in strength, we're probably going to grind lower. I'm not going to try and catch a knife until you're at like below 590s. And that will be actually a pretty solid discount range, but it's not going to happen right now. Like there's no shot to me that we're shooting down to 5 something sub 600 like this month or next month or the month after that or the month after that or the month after that. This is a long time away. It's very grindy and anything can happen. But if we do lose that 550 in change, this is what will be in the cards. You'll see this chart everywhere. This is probably the chart that nobody wants to show because it looks so ridiculous. And it's so wild going back to this morning's presentation of like, not presentation, but like, where are we in the setup of like, look, it doesn't look that bad. We're like 5% off the highs from SPY. But under the hood, it's like, dude, I mean, over 40% of the market is already in correction or bear market territory. Like, how much worse can it get this quickly? I feel like a lot of those areas have to at least get a little bit of a bounce before we can have a full-blown flusher, which we'll see. And so I know you guys had a lot of questions. I saw a bunch of VG requests out there. So I think the oil stuff is where we kind of go first from that perspective. Let's see. I could do... So you don't see this chart very often. This is like multiple time frame analysis. So I don't know who had the VG request, but VG is this is very much Nat Gas. So bottom left is the high time frame view. So this is a weekly chart. Pretty solid, coming into resistance. At this point, Venture Global, look, I didn't really understand like how much this plan that they have, how big of a provider it could make them globally. So I do think that their plan to build out everything is a big deal. Yes, we have like this massive, this is like NextDecade breakout around 9. And we have this extension here. And I get what this looks like, but not being a pattern trader is not a big deal to me. What is a big deal is taking this whole thing. All right. So as long as it's holding over 14.5, look, this is probably going to be reaching for these areas. So first one, 1688, which looks like we have acquired. So what I'm looking for is in the past, since this is what we're chasing back up to, I'm looking for these little inefficiencies of the market. And the last one I see looks like about here. Looking for the big breakdown, and I'm looking for the big breakdown candles in the past, which is here and here. And the way this works is like I'll get the candle right before the big red candle, and then I can usually see that's going to be resistance, just how that looks. So this is already done. The one over here is right there, 1793. Might be a little aggressive, possibly 1780. If I play it forward, we're not quite there yet. So I would say 1780. You're very close to it. Not that big of a deal. If this breaks out, though, is if you're in VG, I don't think that you're in it for the near term. That is a near term view. You're probably in it for a longer term view. So let me give you that. And that brings you to like the 25s, maybe even a little bit higher. I was looking at this in our group, I think a week or so ago, and I'm like, if this can really sustain, like really, if it sustains over 18 or I'd say 14, over 14 and a half, we know it's going to just under 18. If it's over 18, this is like happening, like definitively happening. Volatility on this name has absolutely exploded. We were looking at this, and I think that you could realistically sell some leap calls in this scenario because of the way it tends to move, and because of the way that because of maybe some of the near-term reasons why it's been moving the way it has. If we get a ceasefire, not that Nat Gas is going to come down, because at this point it can't even come down that much, but it could be on this trajectory to 25s. I think you could sell some leap $25 calls and probably collect a pretty penny being long up through that with some kind of downside protection to 12 and a half. And at 17 or whatever it's trading at now, I'm pretty sure that you could come up with a trade that gives you that upside exposure to the mid to high 20s, as well as providing like 30% downside protection, selling some kind of leap call. So I actually like that a lot. What do you got? So NextDecade is similar here. Yeah, NextDecade is 660s, I think, is going to be that support area. Pretty much same trade too. This actually looks, yeah, if you're in these, I don't know. It's unfortunate. Like I just got in this like recently, it's like 6 and change. I hate it when my stock, like I buy something and it just rips your face off like 30% in the next few days. It's like, I did not plan on selling you that fast. So potentially cover calls are a good situation here, especially after this kind of move, like these kind of moves on these stocks. You can probably get a pretty penny for a lot of these like kind of wild upside calls. Netflix, oddly, I would actually say Netflix becomes a safety stock. It's a weird thing. So Netflix down to 90, probably a decent spot. Let's get an exact measurement here. It doesn't have any exposure to any of this shenanigans that's going on. Not even AI, none of that, right? 87.71 down to 85 is so this is your typical retracement. And what I would say here, looking at Netflix, is that I don't know that you're going to get a typical retracement. This is another retracement level. It's about 38%. It's a fib. It's not, you get a 38% retracement. And if this is it, this tells me that there's a lot of appetite. I'll tell you when I'll know. For this stock, again, it's probably going to become a safety stock. I know, as weird as that sounds, it's had all the headwinds happen. If this bad boy is over 96, yeah, then we are going back over 100 and probably back towards the high. This looks pretty good to me. It's something that you can monitor. If you're long, I would not even sell calls on this, because if this rips in this environment, I actually like it. And I would let that go. Unless you can get something that's like up in the 120s that gives you some kind of payment. Because if this does happen, I mean, at this point, I did buy back some Netflix also, by the way. You're into 105s, potentially 113s. So, I mean, if you could get some upside covered calls that give you this very near term upside with some kind of protection down to 85, cool. I don't think this is going down. I just don't. I think that this is such a bullish pullback. I'm just being honest with you guys. This is such a bullish pullback. Is like it didn't even get to that typical 50% range, because you got to think of why does that happen? It's because people want it, and like it doesn't have any of the exposure. I honest to goodness think that this stock could easily turn into a safety stock and just be, at the very least, like super resilient, and kind of like go up into this like 113 to 105 general zone right here, which it would probably have a little bit of a hard time there, but even still, that's 25% upside in the next few months. Like, I like it. I actually like it a good amount. So, I think dips would be buyable. Like I said, down to 85 on Netflix. I like this one. It's showing me structure. It's just in the process of creating structure. Lunr. I don't know this stock. What do these guys do? I mean, this is a clear breakout, but price target raise. Yeah. I hate doing that. From what? Oh, to $22 a share from 20. It's a $4 billion company. Space. Okay, so space exploration, infrastructure, and services. Is this space data centers? Look at payload satellites, rideshare delivery, lunar surface access. All right, it's not data center. Super speculative stuff. I mean, $4 billion company does not need a lot to move. It just doesn't. Like this can double to 10. It's when you get over 10 billion that you got to be a little bit more serious. You can go from 5 billion to 10 billion in a day. And that 23 is about their target upgrade. Not that analysts have like good timing at all. They probably have the worst timing, but they just upgraded from here to here, which is in the charts also post earnings. This is how that works, right? So this is how the whole, bullish to bearish or bearish to bullish kind of setup happens. So $20 to its upside's 22 and a half, 22 and a third. It's not unless you're making new highs that you can actually get an extension. It's way early to even think about that. All I can say is you have from here to here. If you get over all-time highs, then you can ride this to like 28s, 29s. But that's where it is. And you don't want to see this below 18 and a half. That's lunar. Dell is interesting. I mean, so news catalyst, let's see if it has any legs. News catalyst as in like SMCI. God, SMCI. I mean, I don't even know. Is there SMCI money left in there? This is real close, man. So this Dell chart looks good. This is a very long chart. This is 2024, 2 years, 2-year consolidation. $60 lows. You gotta be cautious. So right now, as long as it's over 143, that's a pivot. I missed this trade. Oh, well, 143 is a pivot to go to 180. So that's the trajectory as of this moment. This is your last kind of fair value, 162s. So if you can get through this, then your next stop is 180. It's 200 if it does break through that 180 ceiling, but that's the ceiling right now. Yeah, that's where we are. And jeez, this is the hard part. The risk reward is not great because the downside, if it doesn't break out, like I don't want to trade breakouts right now unless it's just a day trade. If it doesn't break out like that, like your basic pullback is to 140, potentially to 125, and the setup is still valid. Like that's the hard part about this specific chart. Like it could pull back to either one of these and the setup is still valid. So your risky entry. But if you entered late like this, you just have to have a plan to like be able to buy more lower. You'll know that pullback is happening if you're below 140. I mean, again, that's $20 downside. That's a lot of dollars downside. 15%. I wouldn't take this. You couldn't pay me to take this because it's too risky from a risk reward perspective. And I don't want to go short because I mean, one, I like the stock, but it's a high risk, low reward trade on this one for Dell. But if you're long, you stay long. Moo. I heard you guys saying Moo is coming down earlier. Dude, Moo is on the 50. Everybody's like, so what's happening? Look, you have a higher high. You have both. So this, I think, goes into what we call price discovery potentially. So you have a higher high and you have a lower low. Higher high, lower low. This is the consolidation area down at 360. Also kind of a tough call. Like one other thing I didn't say, and it's possible that like while the data center spend is not in question right now, it's not in question. I think the next question, and if you're on something like Micron, the next question that you have to understand is that is it going to accelerate? Because like these stocks got these prices based on like I think it was the best quarter ever, right? Like one of them, definitely best quarter in the market from Micron, the print at least. And why is the stock not up, right? So like you go inverse like news, things like that. The hard truth is it's not going up. Not right now. Like unless it's great news, horrible price action. And so that should give you like an immediate pause. Is it broken? No, it's totally in the middle of the range. Like this is exactly where it should be. So like, don't press the upside bet. Is it something I want to sell? You could trim. It's definitely at the highs, but it's cheaper today than it was before earnings, which is the craziest piece. So I, personally now, I wouldn't sell it, but like, is it going to continue higher? And that's a question from the market. Does the market believe that not only is infrastructure spend real, but will it continue to accelerate at a faster pace, at a higher pace? And if the market doesn't think it's going to accelerate at a higher pace, then probably this stock goes sideways for a little bit. So it's a buyable dip, but does it really break out? And that's the question, right? And so that's where this is. You're not going to break trend. This is a pivot literally right here, just under 400. It's probably going to bounce. But does the bounce get back over 450? That's really the next question. This can legit, the low is here. So like this can legitimately go as low as like 370 right here and lock a higher low just to get all the way back here and then do it again. So like it's probably primed for some iron condors near term. Iron condors maybe selling around 460 and potentially 350. I don't mind that for the puts. But that looks like it's gonna be choppy until you might get a headline. It's sideways, but it's not tradable here. Investable, different story, but not tradable right now, unless you're very small range. Rocket Lab post raise. If this is holding 70s, this is going to look good. Otherwise, I don't hate this at all. Building a little bit of a base. I don't know that that's going to be it. I would rather we're going to do this. Same situation here. If Rocket Lab breaks down and I see below 42, I think that's going to be your buy. $42.60. It'll probably happen in the after hours. That ain't happening in the regular session. But she's stuck, and so this one again, no trade. There's going to be a lot of these no trade, right? Like sell your covered calls, sell all that kind of stuff, unless this is trading over 78 or below 60. No trade. Assume that it goes sideways and that this right here is the range that it trades in. So no, right now I would expect it to get back up to 75 and stop and reverse course and come back down to 65. I'd see $10, $10 range like that. It's not breaking out though. Enphase. I mean, it's intraday, 20-day broken. This is a little violent. I mean, you have an earnings move from here. You could easily pull that whole earnings back, which is kind of what I'm looking at. That's 37s. Yeah. If this doesn't continue on over 45, expect 37. At least. That's your pivot. That's your support, 37. Otherwise, if this were to do well, you'd still need to see it go sideways for a while. I'll take this. And so if it's over 45, cool. But if not, this is the range that you'd expect it to be in. So this can dip back into 37s. I don't even know that it will, but it's not going to be ready until it's holding 45, which it's not. I guess they'd want to know where it would go. If it's holding 45, 60s. AOI. So this is like, they keep calling this optics. It's fiber. Small cap. Look, there's a handful of these names that have really good stories behind them. 7 billion market cap. Remember that 10 billion market cap is an inflection point. Trying to pick this is essentially early stage trying to pick Nvidia, like, or Micron. Is it gonna do that? Maybe. It's in the right place. I don't know if it's the leader to do that. But I also don't think that you should or could be thinking about this near term. This is a high beta, extremely high beta. So a pullback here could be exceptionally disgusting on a name like this. And you can't be too Pollyanna like to think that that's not a possibility. So that's your risk, because you're late to the party. Pullback could be in the 50s, low 50s. You definitely don't want to see it at 70 or sub 65. Sub 65 it's not going to look good. But 65 is support, believe it or not. So what I'm going to do is from here to here, this is just okay. If you're not over 125, you're at risk of all that happening. And you have two spots here. Just to call this out so nobody else doesn't call it out. That's what that looks like. And that is literally kind of like your neckline. And right over here is basically what I just talked about. If you were to double that, it's not happening yet. And if this fails to break down like that, that's a very bullish setup. If it fails, but it doesn't fail unless you're over 122, 123. So that's why I was like, if you're over that, it's all good. And you're probably going to rip higher. But I can't even call this the local bottom yet. And if it does go, you're about 170s, mid 170s, if it does. So that's where this is. It's just okay. I think if you like this, you gotta like it long term. This is basically a fair pullback. It's not a great pullback. It's just fair. Is what I'd say on this one. So that could be that there's a lot of appetite for this stock. I know that this stock will probably become one of the next cult stocks. You just have to figure out if it's going to be real or not. And there's a lot of YouTube noise on this stock, so we'll see. You literally got to go out and talk to the people that are like manufacturing with this stuff and say, is this a legit? Like, are we only using this? This is the go-to. This is going to be the next thing. It's possible, but it's also possible it's not. And if it's not, then this gets cut in half. But if you're into taking shots like that, this is probably the shot. One of the shots. Just that's my warning. So downside 50s. Nvidia, my guess is going to be totally sideways. Almost hit 170. This is that last low. So this here being the low before the last low. Yeah, I mean, this is not. What are we doing Nvidia for? I'm really not sure what we do Nvidia for. Unless you have like a multi-year time horizon, this isn't. This stock is seriously at risk. Like seriously at risk. 1, 2, 3, 4. But it's not doing anything. So it's at risk. But it's not happening. Like it's not breaking down. There's more downside than upside here, but like I feel like you'd be happy holding it. It's just the risk reward. Look, your potential reward is in the mid, maybe like 250. Which is like 48%. That's okay. But your downside is equal. So like if you lose 160, which you're not, then you have 25% downside. If you lose that, let's say from here, literally from here, 30% downside-ish. Let's do like a real measurement. I just don't think this is a big discount. It's not. What's the downside? $20. %13 downside for, at this point, 10% immediate upside. You have potential 10% immediate upside to 195. Which is up in here. So this is the same kind of thing. So immediate, near term to one near, like 2-3 weeks would be in here. That's your resistance. At that point, first of all, you got to get through 185. If you don't, then this is happening. But let's say you do. You had two stops, one at 186 and another one at 195. That's absolutely resistance. It's not bullish yet, but it is exactly the same as SPY. We're like, this is holding. And so it looks like it's going to try to get back up there, probably that 183 level. And then they were like, oh, we're back over the 200-day, at which point you come back down the second you think it's all clear. So, yeah, I mean, this is not horrible. Intraday is the exact same as SPY. If you like it at 173s, like low 170s, then you like it. This is not a big difference, mid 170s versus low 170s. It's not breaking down. The breakdown is going to take you to 150 if it breaks down. Technically, it looks like it's going to break down, but traditional, technically. But before then, I think that this could easily get to 183. And I would actually expect this to be the real scenario. Something like that, 183. And then chill. But that means bounce first. And that could be like the whole week. It's been kind of grinding upside. We shall see. You don't want this below 170 because below 170, then you have like 172. You have quickly to 165. You lose 165. All right, it's happening 150. Thank you for context here. So Bloom, I still think energy is everything. But she's hot. This is a breakdown near term. So here's your local lows. Here's your local highs. Yeah, dude, this is very choppy. It's the range is going to be into the low 130s. So the support area is kind of like already happened. This right here. Downside would be 113. So from here, I think this sets up as like I can chop like this. If it breaks down, it's into 113s. But this is what we would call like, they would technically call this like a rising wedge like that. And you have a wick out of it. It's not a full blown, it's not like fully broken. I would just say if this is your uptrend, see like this where it just kind of like one day opens below and then that same day it closes back above. It's a little bit different here where your rejection is at 154. This is going to be your overhead resistance. Honestly, I think this ends up creating a range. If it's super bullish, the range is as high as 128. Otherwise, downside trade could be trade to 115. But this is one where there's a lot of interest. So I would expect it maybe to bounce up and give it some time before it does pull back. But if this is a real company now, which it was not a real company in the past, if it is today, then it's probably going to be a buyable dip. And that's going to be down to 115s, 110s. I have no idea. And a full-blown, it's too early to call 80s, but you don't want to see this lose like a 120. This is a typical trajectory of like, we've seen this, by the way, so many times, like stocks over 70 here, right? 70, go to 120 here. And then if they extend, they go to like this 165 area. And if they lose, basically what I'm going to say is 145, which is like right here, then you go back down to the 120, which is, we saw that in Hood. We saw that in like, you name your stock. If they can't hold the 120s, then it's 75. And it's this random pattern that you'll see happen over and over and over and over and over and over. So it's actually like a fib sequence, believe it or not. So to that end, we haven't broken yet. I would expect that to probably bounce back into it and then TBD. So a little early. We'll show you what this looks like on Hood. But yeah, you get through the 70 area, boom to 120. Then you get to the 160 type level. You bounce around. You don't want to see it lose 120. The second you do lose 120, you're like, here's 120, 120, 120. You guys can't see this. I'll make this bigger. It's just so crazy. Like after so many years of seeing the same thing over and over and over, you're like, what? That happens all the time. It's so wild. So like here's 120. And here's your 70. But from 160 or so, this happens to be 155, you lose this. You can have it get down to, you can't extend your 120s. You lose 120, you're back to the 70s. But Hoodie, I like it. It's not really breaking out. I thought it was gonna get hit hard. Luckily it didn't. I don't know if March is gonna be that great. Just thinking back on the last few months, like how's crypto been doing? How's the equity, traders been doing? It's probably not the greatest quarter that they're going to have, but there's March Madness that might offset some of this and maybe some other things. So I don't know. I think worst case scenario, I actually don't think this goes anywhere right now. I have upside like resistance around that 110. We have a 98 and change. We have like a hard session gap on the stock right here, 99. I can easily see that as like what we call a counter trend bounce. But this is not getting sold off. 99, I would expect that to pull back. And then if we do eventually get something like this, that's what a reversal would end up looking like on Robinhood. So again, another one that's going to be a little while out. I think if you see these bounces, it's a tough one to say cover calls. And unless you're doing the leap calls on Robinhood, I don't think that the cover calls are going to pay very much after. Oh, guys, 50 days of being sideways. I feel like this is a long for a near-term bounce. 1, 2, 3. I like this. Whoever did that, who is that? Jay Takes. You suck. I didn't want to go long Hoodie right now. This has got to get through 83. But I think you're going to bounce. It's just how big does that bounce actually happen? It's super sketch. This could easily get to, it's a given that you see 75 on this. Does it get through 75 and does it legitimately hold like this? When this happens, like trajectory, this brings it up through 82. And then do you have this sideways base go for another 2 years like they've done to us in the past? Who knows? I don't hate it, but this could go sideways for a bit, as you can tell. You can go sideways for a month. Microsoft, 200-week simple moving average, tagged at 377. 370s is the spot. It's similar, but it's just nothing but lower highs right now. Lower low and lower highs. This could bounce to 398 and still be in a downtrend. This thing's just gotten wrecked. I like it long term, and you probably would too. It's not very often that you get to see the 200-week simple moving average, which is that purple line on Microsoft. Here, I'll make it a little bit bigger. This is a 200-week. Can't hate it. Look at that. This is a good chart. I don't know how you don't buy it as an investor. Look, 200-week, 2022 lows, twice, nearly the 200-week at 2025. The issue that I'll tell you right now is that this 200-week is kind of losing its slope, and it's not that. That's the bigger issue here, but this sets up for a bounce. Definitely. Like if I'm buying something, I'm really buying this. Like you don't have what's a 200-week breakdown look like? This is where your 200-week goes sideways to down for how long? This is a monthly chart. From here, it's like 10 years. 2003. Yeah. 2015. Like 10 years sideways. If you do get that kind of like breakdown pullback. But it's way early to say. But generally speaking, you don't get the 200-week very often on Microsoft. 377. I don't hate it. If you're going shopping, that's probably your discount. Apache. That's really that's a lot of work to do. I'd have to do what it does on red days. Red day. Red day for oil. That's pretty muted pullback for if I'm actually going to compare these two. Red day. What am I looking for? Yeah, if oil has like a big red day, it's not though. I mean, how many percent is this? 16, currently down 15. That's a lot of percent. But it is right into the breakout. Like this is support. '80s, that would probably be your near-term floor. Potentially 75. 75. 85. 85 to 75. we've like sustained over that. We'll see. If you see 75, that's probably going to be a better spot. I don't hate it. Well, if that's super tied to oil itself, maybe it's lagging a little bit. Next coin, yeah, I like Next. It's still 660s, but we got 660. It was 660. I put this in the server. There it is, 660. There's the 660s. So let's do it this way. It can go down to 645, which is going to be that 200-week simple. Full retest is 6. But I would say, like, let's see, where's Nat Gas, Nat Gas? This thing's just so crazy. I don't even know it's worth charting. People get in trouble for charting this. Two and a half, just over 2.5 is like your near term support. You guys remember Boyle? Dude. Did they just split? They had to have just split. No? Oh, that's SMCI. How did SMCI go there? It's supposed to be Boyle. Boyle. Dude, Nat Gas back to the lows. That's wild. I don't know that I buy that. I feel like I actually kind of want to go long Nat Gas right now. But you're not supposed to do that. It's the Widowmaker. Wulf. This is another one. This is even more speculative. This is the most speculative. Next Micron. I mean, it's just not my flavor, but about the same space. There's about the same price as AAOI market cap wise. I'd rather AAOI, quite frankly. But I just feel like, didn't this thing like almost go bankrupt or something, then comes out of bankruptcy? I don't know enough about this stock to have any opinion. So I'll just shut up. This is the choppiest channel, choppiest upside channel. Look at how wicky this is. So I see 17.5, but that's your upside. What I don't like about this is, like, if this here is your consolidation, literally this moment could be a short. Literally this moment. So, like, this is what we could look at as distribution. And we call this like an upthrust, like upthrust through distribute. Anyways, it's a schematic from like 1900s of like what a breakdown looks like. If you don't quickly get over 17 and hold, it's probably going back to the lows of this consolidation. So I don't like this from that perspective. And this chart, I had to drop down to a daily because this is just far too, we call wiki, where like the extremes are just way too crazy to take seriously. But again, I don't think this is a stock that you're in for technicals from that perspective. But if you needed them, it's 17. It needs to be holding over 17. Otherwise, this is the top of the range, and you have to assume that that's resistance, which means that the bottom of the range is 10 towards the 200 to see. Rubrik. All right. So Rubrik, there's something thematic. I don't know if they're going to be a big RSA thing, but security, I think is security is the one space that has something going for it this week. How long have I been on? I'm going a little bit extra today, huh? So more interesting than not on the Rubrik. I mean, I don't know that RSA is going to be its catalyst, but they've had a handful of shots to break this down. Good news is that it's not. It's like hoodie, like it's holding. Trying to grab, like, there's a little wick in here. 51. 51 comes from, like, you really can't see that. But there's this little after hours dip, April 25. Those are where I'm getting my levels, but, you know, it's 51 here definitely has to hold. This is one where I would be more interested in, like, waiting. I mean, I'm not jumping out trying to grab this. From an investment perspective, you know, you don't want it below. I mean, it could go into the low 30s. It really could. This is more of a addressable market issue, not a product issue. So hold the phone. At 10 billion. Somebody tell me if this is expensive or not. Okay, 377 million last quarter. This is revenue compared to EPS. Bigger beat. P is negative. It's negative because why? Because why? What are they doing? They're still not profitable. Yeah, they're not. Trailing 12 months of 46% revenue. Price to sales is 7.8. I mean, they're best of breed in data protection, which is not data security. It's different. They don't secure your data. They protect your data. Like they don't prevent people from getting to your data. This is the biggest thing. They don't prevent people from getting to your data. That's like Palo Alto. That's CrowdStrike. That's Zscaler. They make sure that if someone were to get through whatever things you have in place, that your data, even if it was stolen, is protected. That's what Rubrik is. Maybe it's hard to understand. Maybe it's not. I don't know, but that's what it is. Imagine like an auto restore button for your computer. Like if your data ever got corrupted, you would have something running at all times in the background to basically auto restore your computer live so that you didn't even know that your data got corrupted. That's what this is. I think that's a pretty good explanation, actually. Yeah, that's the best explanation I think you'll ever find. Now that I think about it. But it's the best at that. But that's what they do. So how big is that addressable market? It's not the same as the others. But they're growing. I don't hate this. It's not cheap, but I don't think it's ever gonna be cheap. It's a good name. There's no question. I like it. Have at it. We're blessing the Rubrik. We're blessing the Rubrik. God, don't tell Sam. He's been on that one forever. Navitas. I mean, I've heard mixed things about this, but this looks like your typical range, about $8 right now, up to 11 and change, kind of squeezy. Nebius. Look, I think this is 116. 108 was the level. You guys have seen this set up so many times before, but this is super like medium resistance. If it pops down below 113 at this point, 105 is going to be your retracement. It's a different measurement than we've been looking at before because it has popped. It's had a catalyst with Meta. And the same kind of situation here is like stocks don't go up in a straight line. I just did this like 3 or 4 times over on these setups that we've had. This is exactly how they play out. You identify your kind of like consolidation, your lows. You've broken this general structure near term. This is a repeatable setup. Like you can repeat this over and over and over. You make a lot of money on this. It's called a setup when all these things kind of line up. And you measure this down, you find your bear zone where your bearish retracement is in a bullish reversal. Then you identify literally this level right here. It's to 130. It's going to get there. You kind of did that. At this point, you're looking at your retracement where you don't want this to lose literally 113. If you do, I mean, you can, but from a trading perspective, if you lose 113, you should know that 114 is coming very quickly. Or, I'm sorry, 104 is coming very quickly. If you lose 104, I'm not talking about 108 anymore. If you lose 104, you're probably going back to the lows. But this becomes your support base, literally right here. Right. And while it might not immediately break out, that's fine. It doesn't mean that this setup is not going to work out, but this can easily pull back to like 90s and that whole thing still be valid. Like I'll pull back the Dell chart, but this is normal. And Dell did exactly that. Exactly that. So like if you didn't know that this was going to happen, watch this. This is your setup, like exactly the setup that I just outlined explicitly, that you have your kind of rounding up, you have your bearish retracement 143. Then over here, you have the same kind of thing, right? This is one fair value. This is the first one. Is when 161. Very close to filling here. I don't know if it got to it or not. I mean, you're right there, the first one. You have another one up at 180, which hasn't filled. But if you watch what happens at 143, this is a repeatable setup process. You don't extend. You expect to come back to that bearish retracement. You lose that bearish retracement, you're going to go to 125. There's 125. You lose 125, it can go, your whole support is down here. You get back over 125, it's going to 140. Just like that. This is, I have no idea what's going to happen here. But if you can't get through 143, what I'll say is in this chop zone between 143 and 125, that's where the stock will live. That's where the stock will consolidate. Best case scenario, you want to see it chop around that area. If you don't, you don't. But you need to see that back over 125, and your tradable range in this case becomes here to here, potentially here to here, and eventually these areas. But this is the exact same setup. Look, that's just how it works. It's repeatable. This is a pattern that this is like your chart, not astronomy, not astrology. Astronomy, the science is like, this is repeatable every time, all the time. This is 125 is your break here. You hold over whatever. So back to Nebius. It's what I just outlined. It's literally the same thing, right? If you don't hold that top end, it's 104. And if it doesn't go to 104, you get a bigger pullback, which I'm telling you could be back into the like low hundreds or maybe lower. But it's not yet. So that's what you're cautious of. That's the setup. It's a repeatable setup. It's a pretty typical thing. AEHR, this is Aehr Test Systems. Actually, so this chart is not bad. Typical pullback retracement, small cap, super small cap. This one, 1.5 billion. I can talk about it, but just know you might be able to pump 10% of the volume on a typical day on this stock. It's extremely high beta, probably one of the highest high betas. So from here, you at least go to 42. If this holds, that's your resistance, 42. If you have an extension, I'll give you that. 60, which is hot and heavy. Does it hold 60? No, not necessarily. It's very quick. I was surprised that it held that good. This move from like 6 to 30. Just know this is the stock. 6 to 30 is heavy. Let's use this whole range really quick. 37. Look at how repeatable. It's super repeatable. Same thing as we were just looking at Dell. Same thing as we were just looking at Nebius. Look, you want to hold that 35, 30 bucks is your near-term support. You don't want to see it lose 30. As long as it's over 37.50, cool. You're going back to 45. But it's not until you break through that 45 that you're going to get to, say, 60. These are the ranges. That's how trade is going to work. We just keep going. Meta 585, I think, was the lows. From here to here. 585, that's support. Is, was, has been, continues to be. Kabam. Does it hold, though? I don't know. Literally to the penny. So basic bounce, expect this to see 630s, 635. That's tradable. For sure tradable. Right here, right now, tradable. I would take that. That's happening. So that's another $30 upside. Typical setup. I would cut it short, maybe 630. I would cut it short just below 625, just so I'm not super into resistance. But that bounce is that's clean. I might like pop on a browser and take that trade like right now. Actually, I don't know. Meta's the cleanest setup I've seen so far from you guys. You got to wait for this to be over 44.5. Otherwise, consolidating. We kind of looked at SMCI. I don't, dude. I think 20 was a level. Yeah, I mean, $20 was a level, but like, dude, the market just doesn't like. This is a canary in the coal mine. I don't think it's gonna. I mean, I actually think they're probably too big to fail, but $20 was on my chart somehow. Oh, so this is the last low on SMCI, 17 and change. The low before the last low is like $20. Technically, that's a sniper spot. So, have at it with a stop below today's low. Yeah, I'm not a fan anymore. I just signed off. I mean, I used to hate all over SMCI guys, I'll be honest with you. But they just got cheap to me at a certain point, and I was like, they got cheaper. Now it's like they really have a reputational issue. I don't know. If you buy it here, you have to stop below 17. You don't have to do what you want. But if it doesn't continue on, it still has 17. Broadcom. Yeah, we're getting bounces. So I think the game plan stays. I like this meta a lot. I think the longest term best discount you're going to see out there is Microsoft at the 200-week SMA. That's not a very relative thing, or it doesn't happen very often. There are going to be things like Celsius that probably not going to do the deal right now because this is consumer discretionary. If we get that big bounce, look back to that IGV that we've been talking about for a while. There it is. IGV holding 82, like that's a big deal. This can, like I've always said, this can bounce into the high 90s, maybe even higher. This is a setup for a bounce, for a counter trend bounce until proven otherwise. Shopify, same thing. Until proven otherwise, just know these are all potential counter trend bounces. So you have to be a little bit on guard. It's more of a day trading environment. This had 395 upside target on Tesla today. I've sent that in our group earlier, but just know like they can bounce wildly, but they might be bounces to sell into near term because we don't know that the lows are in like at all. We don't know that the lows are in, but headlines can change. We have a 5-day ceasefire supposedly per the tweets or per the truths. That can change in an instant. Like in a very quick instance, 161, this is resistance here, Palantir, 165s. We know 165, that's big level on Palantir. It's going to be slightly over your 200-day. Doesn't, like all of this, still counter trend. Trend is still down. Trend is definitely still down, but TBD, TBD. This should go to, let's just use this one, this more recent one. 173. 180 is actually highest level of resistance on Palantir. SoFi. I don't know. Would you rather Hood or SoFi at these levels? That's a bigger question. Would you rather Hood or SoFi at these levels? I may or may not do TT this week. It's up in the air. I'm going to talk to him in a little bit, but yeah, I got doctor's appointments tomorrow, like right in the middle of our typical TT session. They're short appointments, baby appointments. They're like 5-10 minutes, but I really shouldn't miss them. So like how we navigate that, I got 2 back-to-back. It's tomorrow and Wednesday. These guys are some SoFi, some Hood. I mean, Hood, couple SoFis. I'm in a Hood camp. Hood versus SoFi. That's like picking your favorite kid. Is it? Not till September. So we're still like early September, August, September. So it's still early. But cool. I do have to go though. I appreciate you guys. We did a lot. I'm a little bit over the typical length. Make sure to give the video a like. Please subscribe to the channel. Appreciate all you guys' support. And I will see you on the next one. We'll probably figure out something for another technical stream with the Mids crew. But yeah, don't it ain't over till the fat lady's singing. That's all I know. All right, guys. See you later. Peace.